Good morning, everyone. I hope everyone can see me loud and clear and hear me as well. Thanks very much for taking some time out of your most likely busy days to listen to this webinar, the Buying a Home in the Netherlands webinar. Before we get started, good for you guys to know is that everything will be recorded and shared with you afterwards. Not just my face and the amazing information I will share, but also the presentation slides. So if you have to jump out at any time, no worries. We'll share everything most likely tomorrow and otherwise beginning of next week. Cool, let's get started. First of all, who are you looking at? Well, my name is Ludo. I am a buying manager at Expat Housing Network. That means that I help secure homes for people that are relocating to the Netherlands, either have been here for a while, want to purchase a home, or in some cases also are rental clients. I am primarily based in Amsterdam, live in Amsterdam as well in a new build property, but I also help in the so-called Greater Amsterdam, meaning Amstelveen, but also Almere, Lelystad, Haarlem, Zaandam, pretty much everything surrounded in Amsterdam. I'm from the Netherlands, so you might hear a bit of a Dutch accent here, but I have lived in the United States for 3 years as an expat child. That was always very cool. I am a proud father, not of kids, but I'm a proud father of 2 cats. If you're lucky enough, they might show up on the screen. They've been very active this morning, so they might demand some attention. Like I said, live in a new build in Amsterdam. Obviously, we don't run Expat Housing Network by myself. I'm here joined by my wonderful colleague, Rafaela. As you see in the right top corner, Rafaela is from Brazil. She is in this webinar to answer any questions that you might have during the webinar. So if there's anything that pops up, feel free to pop in the Q&A. There's a dedicated section for it. And she will answer everything live. If there's anything that's still unanswered at the end, or something where Rafaela thinks maybe this is good to have a chat with the whole group with, then we'll also answer those questions completely at the end of the webinar. As you see, I have colleagues from all over the world. Giovanna also from Brazil. We have Rick from the Netherlands, but has lived in Colombia and South Africa. Ellen has lived the majority of her life in Thailand. And again, me from the Netherlands. A little introduction about EHN. Well, we're no traditional real estate agents. What do we mean with that is that we help with buying properties and with renting properties. So we're specifically specialized in actually securing homes instead of selling or letting houses. So our main focus is really to find you the right property. We charge a fixed fee. We don't charge a commission, meaning that it doesn't matter if you're buying for 200K or for 20 million, you'll always be paying the same amount. We think that's fair. As you saw on the previous slide, majority of our colleagues have either lived abroad or are born abroad, so we know what it's like to settle in a new country. Some added value from Expat Housing Network is that selling agents obviously take offers from each other more seriously, in the sense that they know that diligence in the right manner, we do our work in the right manner, and we make sure that our clients and therefore sellers have the least amount of risk. We can book viewings sometimes when it's no longer possible, in the sense that selling agents tend to block certain days specifically for clients with buying agents. Well, we can make great use of that. We support by reviewing Dutch legal and property documents. I speak Dutch, my colleague Rick speaks Dutch, Ellen speaks Dutch as well. Giovanna actually has learned the language as well. So we are able to review all the legal documents, quite important. But at this point is, I think the most important is where we help to find the market value through market data. In other words, we look at what the market value is. We do a research to make sure we know what the market value is, and based on that, we can actually come up with a competitive offer. We will also inform you about the rules and regulations, and that is just to make sure that you don't make the same mistakes as we did. I'm not here by myself, not just with Rafaela, but I'm also here with my colleague, or with my, so I would say almost colleague, as we work so much together, with Robin from Mr. Mortgage. Would you like to introduce yourself?
For sure. Thanks for hosting again, Ludo. And nice well, for you all to join this webinar. I might look a bit different from the picture that you can see. I can honestly say I am the second one on the right. My name is Robin Uijtdehaage. I won't ask you to pronounce my last name. That's quite Dutch. So I'm a financial specialist at Mr. Mortgage. I'm obviously joined by my wonderful team. You can see there of Cesar, Egle, and Uskan. And so as a financial specialist and with my colleagues, what we do is we guide you through the whole house hunting process and buying process. Now, I wouldn't presume to have anywhere near the expertise of what Ludo has in his field, definitely not, but we focus on the financial side of things. So what we do is we start off with getting an idea of what your financial possibilities are. It can be a bit of a maze in the Netherlands. The Dutch government and the banks also like paperwork for some reason a lot. So you have to sign a lot of things, have to know how to go about things, and that's where we come in. We want to make things as smooth as possible because it doesn't have to be as complicated as it might seem if you know the route. That's basically what it is. Now, we always start with to kind of see what your range is. We work with over, 35 different lenders, pretty much all lenders that are available. We work with them independently, so we don't have any quotas that we have to meet or something. The only focus we have is you to make sure that we can get the best deal available for you. Now, you might have heard before that interest rates can change, right? So they have increased over the last couple of weeks and last couple of months this year also. But sometimes there's a slight decrease as well. So then what we can do is every time that there's a change of interest rate or conditions of anything in the market, really, we will be notified about that beforehand. So we can always make sure that we can get the best option for you that's available there. And it's very nice to be able to do that for you. That can make it a bit more personalized to, first off, we do it for you. We don't have any other focus points there. And so we can make sure that you are happy in your new house. Not only because you have a nice home, but also that you know that your finances are well taken care of. Now, we do a bit differently from banks. We guide you through the house hunting process as well. So we don't just make one calculation, but throughout the whole process, any property that you find, we'll revise the calculation. So we'll see, well, hey, what property do you like? Why do you like it? What are the conditions there? Just to make sure that when you put in a bid with Ludo, obviously, and one of his colleagues, that you know that the likelihood that your bid gets accepted is as high as possible, and that you can also know your mortgage will get approved when you put in that bid. Now, that's something that we give you security for. But the trick is, and Ludo will tell you all about it later on as well, is that you want to have the seller know that you are a good party as well to sell the house to. So security. So that's what we offer as well. What we can set up is a so-called mortgage certificate. So we can already say, okay, hey, we looked in these nice people's financial situation, so we know that everything is okay. And that makes it a bit more likely that the seller will sell it to you. So when you're in the house hunting process right now, you want to increase your chances as much as possible, and that's where we come in as well. So we guide you through the whole process to make sure that everything is as stress-free as possible, and let's just have an exciting process instead of stressful, of course. So that's what we do. Again, I'm joined by my wonderful colleagues. We all have our international side of what we experience with people that we work with, where we grew up, and so on. So, and we're very excited all to help you along this process. So that's pretty much what we do. And yeah, Ludo, take it away.
Perfect. Thank you very much for that introduction. Thanks for being here. We couldn't do it without you. Cool. Well, now you know who you guys are looking at, but I think Robin and I would also like to know who we're talking to. How we do that, I have a little poll. Feel free to fill it in. Obviously, it's not obligated, but it would be nice to see how you found us, what you're looking for, what age range you are, etc., etc. We can potentially tailor the webinar a little bit towards the audience that we're talking to. We'll give you about 30 seconds to a minute to fill it in, and then we'll move ahead based on that. Perfect, we see some nice numbers coming in. I think the majority is under 35. Well, I'll explain a little bit later why that can be very interesting. We have a nice mix of singles, couples, and families. It's always nice to see that even though I know that the rents are crazy high, that still the majority of the people that are looking to buy actually want to settle in the Netherlands. So it's always a nice compliment. And the majority in Amsterdam, nice. Well, I have to agree with that. Amsterdam is super beautiful. All right, I'm going to end the poll. Thanks very much, guys, for filling it in. And then we'll move ahead. So the goal of today. It's always nice to have a goal. Goal of today is to add value to you, to add information to you freely. That is what we believe in. Sometimes it feels like it's a secret network of agents who have this glass globe of information. Yeah, it's not the case. And we also feel like everything should be shared freely. And well, that is also why we're here today. Let's start off with some things that are good to know. I'm going to pass it right back to you, Robin.
Yeah, very good. I see you adjusted it already. Very good. No, I was actually kind of thinking, well, that's good to know. So National Mortgage Guarantee, it has an abbreviation, which obviously is a Dutch abbreviation, NHG. What that means, it's essentially kind of an insurance arrangement. Now, bear with me, a hypothetical situation. Let's say you bought a house for 300,000 euros, the value also came back at 300,000 euros, and you closed the mortgage for 300,000 euros. So far, so good. You have a happy job, everything goes well, but disaster strikes. Means that you get laid off, so you don't have your job anymore, or you get disabled, meaning that you cannot do the job to the same extent that you can do right now. Your income decreases. But it gets worse, your income decreases and you cannot pay your mortgage anymore. If you cannot pay your mortgage anymore, it might mean that you have to sell your house. Now, if that's not enough, the perfect storm, also the property value decreased. Bear with me, I don't necessarily expect that it will decrease to that extent that you have this issue, but let's say. So it decreased to 280,000 euros. And the remaining mortgage that you have is still 290,000 euros. So what happens? You don't have a job anymore. You have to sell your house, and you have to sell the house for less than the property value, than the mortgage is. So you have a remaining debt of 10,000 euros. If this specific situation occurs, then National Mortgage Guarantee says, okay, you closed the mortgage under the conditions of our insurance, let's say. So they will pay that 10,000 euros remaining debt for you. So that's basically what the premise, what the idea is of National Mortgage Guarantee. They don't only do that out of the kindness of their hearts. You have a one-time buy-in of 0.6% of your mortgage. And that's also something that will be shown in the overview of the cost that Ludo will show you in a bit. Now, when you can benefit from this National Mortgage Guarantee is only when the property value and the property value for property that you buy this year is at most 355,000 euros. But it's always based on the average selling price of the year before. And now we already kind of know, the estimation is already there, what the property value is on average this year. So from 2023, the limit you can buy a property for and close a mortgage under NHG is now increased to 405. Significant increase, 50,000 euros extra. So now that means that you can benefit from this insurance arrangement to an amount of 405,000 euros. This is about the value of the property and also the mortgage that you can take out. Now, this, again, I mentioned before that the situation that specifically occurs when property values drop, that isn't necessarily the expectation that will drop by that much that you are impacted by that. There's another benefit. When you have an insurance and a guarantee, as it's also called, of course, that's something that banks are very happy with. The more guarantees you have, the less risk the bank has, so therefore they will decrease their interest rate. So when you close a mortgage under the conditions of NHG, the bank will charge you a lower interest rate. That can be quite significant. Kind of depends on what bank we go with in the end, but on average, interest rates are now close to 4.7%. When you close it under the conditions of NHG, that interest rate is approximately, let's say, around 4.2%. So that's quite a difference right there. So that's basically what National Mortgage Guarantee means. It has some beneficial conditions too.
Perfect.
By the way, one more thing. Sorry, Ludo. I almost hear one of the questions that will come up. What happens if you buy a house for 420,000 euros? Can you still have mortgage guarantee up until 405 and then pay the rest out of your saving? No. The maximum value and purchase price has to be 405, no more. If you go over, then NHG is not an option anymore.
Unfortunately.
Go ahead.
Yeah. All right. Thank you. Thank you for that addition as well. Cool. So next point, transfer tax. I said it already when we were doing the poll, something that is well, a point of discussion, especially if you're close to the age of 35. What transfer tax is, it's the tax that you're paying when ownership of a property is transferred from a seller to a buyer, from one person to another person. Now, you have a few different rates when it comes to transfer tax, but there are two that are most popular, so to say. Let's see, let's look on the right example first. Here we have a couple, they're both aged under 35, but one of them is not a first-time home buyer. To be honest, that doesn't really matter. In this case, it's more important that Kate and John are both 35 years old or older. Purchase price is 500K. That's the one that you want to look at, 500K. Now, in this case, Kate pays 2% transfer tax over her property share, and John pays 2% transfer tax over his property share. Assuming that they both own 50% of the property, in totality, they're paying 2% over the 500K as transfer tax. However, and that is the regular transfer tax, I would say you always pay 2% over the purchase price. However, there is a scheme in play currently that makes it more attractive for starters on the market, where you can receive an exemption on the transfer tax. If we look completely on the left on that example, here we have Kate and John again. They're both under 35 years old. They're buying a property of 400K or lower. In this case, the transfer tax is 0%. So they're both paying 0% over their share of the property. So if we look at these examples, the things that pop up immediately is well, two things. First of all, you need to be under 35 years old. Second of all, purchase price needs to be 400K or lower. Now, there is a third thing that you need to meet as a requirement, and that is that you can only use this exemption once. So if Kate and John do it this year and then buy another property next year, also under 400K, they're still under 35 years old. They can not use this exemption because they've used the exemption before. So those three things: under 35 years old, under 400K or lower, and using the exemption for the first time. Now we have a funny rate, and this is the one in the middle. This is where Kate is over 35 years old, in this case 37, and John is under 35 years old, he's 33. And the purchase price is, again, as the first example, 400K. Could have been lower. In this case, Kate pays 2% over her property share. Because she's over 35, she cannot make use of the exemption, so she has to pay 2% over her part of the ownership. But John can actually use the exemption and therefore pays 0% over his property share. In this case, they actually totality, if both of them are owning 50% of the property, they pay 1% transfer tax over the entire purchase price. We have another rate. This is not very applicable in this webinar, would be applicable if you're looking to buy as an investment purely. Then transfer tax is currently 8%. Doesn't matter if you are 20 years old and buying at 200K. Still, if you're using it not as a residential property, then you're going to be paying 8%. Keep in mind, this rate is going to go up actually next year to 10%, 10 point something percent. So yeah, everything is in the staircase to go up. Robin, you would like to add something?
Yeah, just one addition. We're nearing the end of the year, so the new ranges and so on, new limits for the next year are published now as well. So NHG increased, and also this this exemption has also increased. So if you're under 35, you can purchase up to 440,000 euros. So they increased it by 40,000 euros. So yeah, just that's the benefit that you have. If you're under 35, over 35, unfortunately, you cannot make use of it.
Exactly. Yeah. So if you have the transfer date somewhere next year, and you're buying at 410, for example, then indeed you can still make use of the exemption because the threshold is going up to 440. When you receive the presentation slides tomorrow, you can actually press the button that you see on the right corner, visit the transfer tax checker. You can fill in some details about your personal situation and the property that you're looking at, and you can actually calculate how much transfer tax you would be paying for that property, which is good to know. Cool. All right. I'm going to open up another poll because I'm very curious to see where you guys are actually in the buying process. If you're still in the researching phase, you might already have made an offer. We sporadically have people who already have an offer accepted in the webinar, which would be very, very cool. And just to see if you've had a chat with a professional already. See some nice answers coming in. Thank you. I think the majority is all in the researching phase. Well, makes sense. That's, I guess, also why you're here. Thanks, everyone, for filling it in. I'll move ahead with that next slide. Thank you. So let's talk about renting versus buying. Maybe a bit strange in that we're talking about renting in a buying webinar, but I think it is important to share with you what the differences are and to see what the right choice would be for you. Well, let's start with the question why you actually should rent, or why it would make sense for you to rent. There are a few benefits of renting a property. First of all, there's a lot more flexibility when you're renting a property, meaning that if you want to, for example, move on with the next expat adventure somewhere else, you just have to cancel your rent, and pretty much next month you're free of any obligations within that property and can go wherever you want. It's a lot easier to move, and like I said, a lot less obligations. There are no taxes or maintenance. Well, no taxes in some degree, in the sense that there are some residential taxes. For example, the garbage disposal tax. This is something that a tenant also pays. But the rest of the taxes, like water taxes, sewage taxes, property taxes, that is all for a landlord or a homeowner. So not something that you'll be paying as a tenant. And all the major maintenance, like fixing the roof, doing the paint work on the outside, making sure that all the window facings are okay, etc., etc. That is all for a homeowner. So your monthly payments on the property itself are going to be very low when it comes to maintenance or taxes. Besides that, there's no down payment required. Of course, we do have a deposit, but the deposit, if everything goes well, comes back to you. So in a sense, you're not at the end of the road spending any money. Whereas if you're buying a property, there's a lot more costs involved, because buying the house itself costs money as well. Think of notary fees, the transfer tax we just talked about, or a lot of other things we'll touch base on a little bit later. So it's a lot cheaper to actually move forward with a rental property initially. Then some cons of owning a home that correlate with the things I just mentioned. Obviously, the taxes, maintenance is a much higher maintenance cost, and it's a bit more difficult to move, especially now in the current market where it's changing a little bit. It's becoming more difficult to sell your house. So yeah, unless you have a lot of money in the bank, you normally want to sell your property first before you actually move on to your next purchase. But we hope that you are still interested in buying a home, because there are definitely a lot of pros of owning a property as well, why you should buy. First of all, stability. So once you buy a property, once you've purchased a home, there's no one telling you that you have to move out unless you stop paying installments. Then the bank at one point, right, this is not working out, we're going to take back the house. But as long as you keep paying your mortgage installments, you have the stability in your house. If the market dips, or if any crazy crisis breaks out, you at least have the stability of your home. You don't need to go anywhere. There's no landlord saying, well, I want you to move out, anything like that. At least you can hold on to your property, that's for sure. Besides that, your monthly payments are not something that is going to the pocket of your landlord, or you're not paying off anyone else's mortgage. You're putting the money into your own bricks. In other words, you're building up equity. Obviously, part of it, your monthly installments are interest, but a big chunk will also be repaying your loan. And the longer you're repaying, the more money you're putting back in your own pocket, assuming that you can sell at least at the purchase price again, or maybe even a little bit higher. There's currently also a nice mortgage reduction scheme, meaning that at the end of the year, when you're doing your annual income taxes, you can ask back quite a big chunk of the interest that you've paid on your mortgage payments. Then the cons of renting a home again correlate with the things I just mentioned. are expected to keep on rising. In other words, the amount of money that you're throwing down the toilet every month, or pretty much giving to your landlord every month, is expected to keep on rising. There are no tax benefits, and there's especially no creation of wealth besides the money that you might save on the side, but there's nothing being put in the bricks or anything like that. Financial side of renting versus buying, Robin.
Yes. So obviously, when you're considering moving to a new home, you have to. It's always good to make this comparison, so to see what the pros and cons are. So that's what Ludo just mentioned, and also what the financial side would look like. Now, here's an overview of two similar properties in the same area, pretty much. Obviously, this interest rate, unfortunately, is a bit outdated at 4% now, but maybe we'll go back at some point in time. This is based on when you have similar properties. The renting amount was, at the top of my head, approximately 2,800 euros. And so when you look at a mortgage for a similar type of property, the interest rate approximately 4%. Duration of a mortgage regularly is 30%. That's also the maximum time. And then with interest rate of 4%, your monthly gross payment, so this is excluding this tax benefit on the interest rate. So what will be taken off your bank account by the bank every month will be 2,363 euros. Now, when you considering the mortgage payments at 2,363, that's the gross payment, that's repayment of your mortgage and also interest payment. Now, the interest part of that payment of the 2,363 is 1,650 euros. So that's essentially, that amount is money down the drain. You don't get anything back from that. The remaining amount, so what you repay on the mortgage, like Ludo already mentioned, when you repay on a mortgage, you sell your house, then you get that money back. So that's kind of saving your money. So then when you compare, when you have a very even comparison, you could say, okay, 1,650 is money down the drain, same as interest, same as rent. So that's what you can compare. Now, of course, more money will come out of your bank. So what it means, essentially, you have to see, okay, when is that break-even point? Because you also have to do an investment. The financing cost and the purchasing cost for a whole mortgage, for a whole property. So that means transfer taxes previously mentioned, but also the cost of your buyer's agent, your financial specialist, the notary, the appraiser, all of it. And again, Ludo will come back to that specifically later on. Amounts to approximately 18 to 20,000 euros when you're in this price range. So that means that you have to put that down directly. You cannot use that. You cannot pay that out of your mortgage. That's not possible. So you just have to have savings as an investment to buy a house. So that's what you don't have when you rent a property. So when is that earning back period? So it's approximately 22 months. So let's say 2 years. So then on a very cold financial side, you could say, okay, if I stay in the property for 2 years, then it makes sense to buy the house. Now, sure, that is kind of the moment where it starts to, when the tipping point when it starts making sense to buy a house. I would suggest to buy a house when you are planning to stay in the same property for about 2, 3, preferably 3, 4, 5 years. That's really when it starts to make sense. Because after 5 years, here's a depiction of what the difference would be renting versus buying. So your monthly payments for buying a property, so the mortgage payments, repayment, and interest payments are approximately 141,000 euros. Seems like a lot of money. Sure, it is. But from this 141,000 euros, you also build up almost 50,000 euros of equity. What that means is that 50,000 euros of that amount has been repaid on the mortgage. So that means that that's when you sell it, then that's what you get back again. When you rent a property, it's even then you pay significantly more, because then you pay 180,000 euros and you didn't build up anything. From the 180,000 euros, that fully goes to the landlord or lady, and you don't get anything back from that. One additional thing, this 141,000 euros seems like a lot of money. Again, it is, but you get part of it back. Not only the equity, but also the tax benefit that you have. Now, what that means for you specifically in your particular situation, your particular house, of course, that's what we'll make a full rundown of what that means. But essentially, in this case, it makes significantly more sense to buy than to rent. Obviously, check if it makes sense in your personal situation as well.
Yeah, perfect. Thank you very much for that. Yeah, and with the rents expected to keep rising, it's going to become more and more interesting to purchase purchase a home, especially if you're staying for a while, as you see here, 5 years. Okay. Some market drivers. Well, the market has been rising significantly, especially over the last 2 years. We are entering a phase where I wouldn't say a huge switch is happening, but at least stabilization is happening. So prices aren't increasing that rapidly currently, but it's good to see what has caused the prices to increase in the previous period. Few things. First of all, some fiscal benefits. We touched base on a few of them already. We have the transfer tax exemption, makes it interesting to buy property, big incentive for starters to do so. The interest rebate or the interest deduction that you can do on your annual income taxes. There's no capital gains in the Netherlands. That means that if you are making a nice chunk of money on the sale of a property that you own, that chunk of money is going directly into your pocket or potentially to a purchase of a new property, but you don't have to pay taxes over that capital gain. So that is very interesting. Currently, there's still a tax-free, well, we call it in the Netherlands a parent donation, but it is actually a family donation. Currently, that's at around roughly 100,000 euros that can be donated tax-free via a purchase of a property. Good to know, though, as the majority of the people here in the webinar are, I expect, from abroad, is that if you that limit is 100K for Dutch people in the Netherlands. But if you have a wealthy family member who is willing to pay 200, 300K for a purchase, then there you can do so tax-free as well. Currently in the Netherlands, it's at 100K this year. I think next year it's going to 35, 38,000. And then starting from 2024, this scheme is actually ending. So if you do have some money laying around, don't wait too long to spend it. The interest rates have been rather low. Obviously, they are rising, so they're not the 1.5, the 2% that we saw a couple of months ago. But still, if we look back at 2008, 2009, 2010, where the interest rate was hovering around 6 to 8, we are still at a rather low interest rate. Means that money is on the cheaper side, and therefore it's more interesting to actually take out a loan for a property. Rents are high, as mentioned before, expected to keep on rising. Like I mentioned always and mentioned before, put the money in your own pocket, not the pocket of your landlord. And then finally, there's still quite a lack of supply, even though there's a big plan to start building a lot of properties. The demand is still a lot higher than the offer, meaning that more people looking, more people bidding toward or bidding against each other, and therefore prices have been rising significantly. I think the government came with a plan to build an additional 900,000 houses before the end of 2032, so they have 10 years for that. They came up with a lot of these kinds of news articles before. They've never met it, so I'm very curious to see if they're going to meet this 900,000 this time. But it would be nice, because that means that the demand and the offer is leveling out a bit, and more balance would be created on the market in general. All right, well, the closing fees, what you would need in savings before you actually start the process. This is the cost that you would need to pay out of own pocket next to the purchase that can come from a mortgage. Let's run through them. So first of all, the transfer tax, the amount that we talked about before, it's 2% of the purchase price, unless you're under 35, buying up to 400K, 440 next year, and you're using this exemption for the first time. But typically speaking, it's 2% of the purchase price. Then you'll need a notary. The notary will draft up the mortgage deed and the transfer deed. In Amsterdam, actually also the purchase agreement. The cost for the deed differ between 600 to 1,100 euros. Now with the whole inflation going on, also the notaries have increased the price a bit. So it's really touching the 1,100 in the majority of the notaries. Then you'll need either a bank or a mortgage advisor to advise you within the financial side. This differs between 1,500 to 3,400 euros. A typical real estate agent charges 1 to 2% of the purchase price. As mentioned before, we charge a fixed fee. We'll let you know at the end of the webinar what that's going to be. An appraiser between 700 to 900 euros. An appraiser is someone who comes into the property to actually define the market value, draft up a whole report, send this to the bank, and then the bank will say, okay, this seems to be the market value, and therefore will give up to 100% of that value. Technical inspector, 439 euros, 440 euros. Someone who is, well, obviously going to technically inspect the property, make sure that everything is as we want and expect it to be. If you don't master the Dutch language, then when you go to the notary to sign the transfer deed and the mortgage deed, this appointment will actually happen fully in Dutch, which is still a bit strange to me, as all of the notaries speak fantastic English, but maybe it's also a way to keep the interpreting business alive. But this cost is 250 euros. I would always choose to go for the English language because the more special on why that's required. But this is having the bank make a deposit on your behalf. This is typically 250 euros or 1% of the amount. And then if you want to make use that we talked about before, you pay an initial 0.6% of the mortgage amount to get access to the insurance, get access to the lower interest rates. Now we have a third linked to your mortgage is tax deductible. So that means a mortgage deed, advisor, the cost of a bank, the appraiser, and the NHG is all tax deductible. Now the technical inspector, if the bank requires you to do a technical inspection, then all actually also becomes tax deductible. Good to know. So as you see here, Robin's costs are tax deductible. Unfortunately, my costs are not tax deductible yet, but I'm really keeping my fingers crossed that that will change in the future because it's becoming more and more difficult to work without a professional on your side. Cool. Then some tips to win in the current market. As the market has been going up and down, it's nice to have some tips to actually make sure you get a winning offer. First of all, and this is, I think, the most important one, that's value, value, value. To explain that a bit, we have a property here, very nice, 395,000 euros. That is the asking price, in other words, invitation to make an offer on this property. Now, the asking correlate with the market value. The selling agent can actually list a property at a price that they come up with. So the value of this million, they can still 5 if they feel like it. Wouldn't make sense, but technically speaking, they can do it. To look at an example here, asking price is 395. But I, during the process, have done a price research and looked at comparable properties and found out that actually the market value is not 395, but the market value is a bit higher. It's 415,000. Now, the market value is also the max amount that a bank will give to you. So this is very important to know because if we make an offer at 600, most likely we'll get the offer accepted. However, if the bank only gives us 415, the difference needs to come out of own pocket. If you don't have it, we can't move forward with the purchase. So it's very important to know market values. Eventually, the purchase we make an offer for 35. Then what we see is, and this is what we hear a lot around us, the overbid in this case is 10%. But this is the overbid over asking price. And as I mentioned before, asking price doesn't say much because if you put the asking price at 100,000, then the percentage would be much higher, while the difference between market value and purchase price is would still be the same. Because in this case, the actual overbid, and when I'm talking about overbidding or overbidding percentages, I only want to talk about the difference between market value and purchase price because that's the thing that, those are the only factual things really. Well, this selling agent listed it at 395, but we can also look at an example of another agent that listed the same property at 375. Market value is still 415, purchase price still 435. In this case, the overbid that you would see online is 16%, while the actual overbid that I always talk about, is still only 4.15. So this is why I always say, if we know the market value after we do the price, we disregard the asking price because it doesn't say much about the value of the property. Up with a competitive offer, we say, okay, I'm willing to spend, well, in this case, 20,000 out of pocket to secure this. Or we can say, I don't want to buy over market value and make an offer at 415, depending a little bit on where you're buying, what the market. But this is how we come up with the strategies, let's say. Second one is a winning offer. That correlates a little bit with what I mentioned before, especially the first bullet point, and that's offering a good price. To go back to the previous offer, or previous, if we have highest bid, but if we cannot come up with the money in the difference between market value and the purchase price, then we can offer 1 million, but we'll never be able to pay for it. So that's why we say offer a good price, a price that makes sense, a price that has been thought about, and something that we can actually explain to the sellers why we came up with that price, and also show that we are able to pay this price. That also has to do with the offering security to the sellers. One of the clauses that we can actually put in the offer is a subject to financing clause. What you say with subject to financing is that, for example, you're making an offer of 435 and you need financing of a certain amount to actually move forward with that purchase. So to again work in examples, if we say we need 450,000 euros as financing, so that, hey, we know what the... And with that example, you also show that you have 20,000 euros to cover the difference between market value. So then you say, okay, the offer is subject to 415,000 euros, but the offer itself is 435. So we are willing and saying fully on a mortgage. Now you can also say you're not security to the seller. Well, you're depending on, in this case, a mortgage provider to actually with a purchase. You can also say we are making for with financing, free to take market value. The mortgage provider says, well, the funds available to actually pay for that mortgage, we're going to reject your mortgage application. Then that rejection does not enable us to pull out from a purchase. So we don't have an insurer on our side. However, you do the security to others. And the more you offer, the bigger the chance of getting the offer accepted. Then third bullet point, offering the least amount of hassle. This has to do with majority of the time with having a technical inspection in your offer or not. But this just is a way of making the purchase as easy as possible. So if we get the offer accepted today and can go to the notary tomorrow to sign the purchase agreement, that is the least amount of hassle. We'll need to put some hassle in the sense that we need an appraiser to come in. I, especially in Amsterdam, try to always have a technical inspection clause in there. But making the process as smooth as possible makes it more attractive for the seller side. And then the last thing, something that has added value more and more in the last couple of years, months, is offering a personal touch to the offer. And this is just to show to the seller who you are, what you're going to do with the house, and to make sure that the sellers know that the property is going to be handed to someone that's going to take good care of the house again. This is what we see a lot also in a little bit smaller parts of Amsterdam or smaller parts of the Netherlands, where neighbors still know each other a lot and want to make sure that the neighbors will be happy with the new buyers as well. But also in cases where the sellers specifically don't want to sell to an investor, but want to transfer the property to a young family who's going to start a whole new life in that house again as well. So it's always nice to add some kind of bio about yourself. Then final point, due diligence. We have the technical inspector and we have the appraiser. Now, before I move ahead, what do you guys think? Do you book them before or after your offer is accepted? I'll give you a few minutes to pop it in the chat. I'm always curious what the first assumption would be when it comes to the due diligence of the appraiser and the technical inspector. Just pop it in the chat. Don't be shy. Feel free to pop something in. I see some befores coming in. See a question from Dragana. What is that? Well, question. I will explain a little bit. I see that the majority says before. We have a few afters. I won't won't hold you in suspense any longer. It's right here. After the offer is accepted, this would be the sweet spot. Why is that the case? Because as we saw before, the technical inspector and the appraiser, unfortunately, don't work for free. Up to 900 euros, technical inspector 440 euros. Well, that's around 1,300 euros that you're going to be paying for your due diligence. If you do this every time you want to make an offer, it is not guaranteed that an offer is going to be accepted. So if you have to do this 2-3 times, then you're already paying 2,000-3,000 euros on due diligence before you actually have an offer accepted. So this is why we want to do it after an offer is accepted, so we know we can also move forward with that purchase. Luckily, I'm also here to do the due diligence. So I will do the price research, make sure that we know what the market value is. I will go through the property documents, make sure the state of the home is okay, so that there are no major red flags. And then the actual professionals of the due diligence part can come in to make sure that the value is what I thought it was going to be, and the technical inspector can see that well, everything is as I expected it to be. Typically, between having the offer accepted and signing the purchase agreement, it's around 1.5 weeks. In the Netherlands, only the moment that we sign the purchase agreement, you actually have a legal binding agreement, meaning that if something pops up here from the technical inspection, which seems to be a red flag, we can still pull out without having any financial consequences. Or if I think the market value is 415, but the appraiser has an off day and thinks the value is 350, and it is not in line with what we want to spend on the property, then we can still pull out and say, okay, this is still not in line with our expectations. Only from this moment is the moment that we have a legal binding agreement. Then still you have another 3 days of a reflection period or cooling off period to pull out again without giving any reason. Now, after those 3 days, you are tied into the agreement and all obligations are in place, so to say. To give a little bit of a greater timeline, so we were just talking about this process, offer submitted, getting it approved, and then signing the purchase agreement. But to run through the whole timeline, how it works is we start here. It's a big bullet point because we'll do a lot of search, find the right home, do viewings, make sure that the properties are in line with what we were wishing that they're going to be like. Then I always find annoying, this space is a little bit small, but actually a lot happens here. This is also, again, where I do the property document review, I do the price research, I'm in contact with the selling agent, back and forth, making sure we know what the current state of affairs is, and then making the most competitive offer as we can. Then we have it approved indeed. We have around 1.5 weeks here where we have the technical inspector and the appraiser come in. Everything is as we want it to be. Everything is as we expect it to be. Fantastic. We go to the notary. We sign the purchase agreement. This is also the moment that you sign the purchase agreement to Robin, and Robin is able to press the big green mortgage application button. And well, it's not that easy, but he'll start the whole process and make sure that everything is aligned there. And the average time is around 4 weeks to get the mortgage approved. Well, we always say 4 weeks, but I know Rob much quicker, but the typical time is also, I think, around 2-3 weeks now, with the mortgages being a little bit unstable. But yeah, let's say a bottle of champagne, because after this, not a lot can be. Depending on the date that we agreed upon, we will go to the notary to have the transfer. Typically 1 week before that, we'll get the statement of completion. Statement of completion, in other words, it's just a fancy word for final invoice. On this final invoice, you will have the purchase price, transfer tax, my costs, Robin's costs, any municipal taxes, any land registry costs. All of that will be gathered all on one invoice. You'll pay it one time to the notary, and then the notary will pay everyone accordingly. Like I mentioned, we'll go to the notary, we'll sign the transfer deed, we'll sign the mortgage deed, and that's also the moment that you have gotten full ownership of the property. You get the keys, and then really it's party time. Then we still have the liability term. Well, we mentioned 2 months here, however, that is a little bit on the long side. Yes, technically it's 2 months, but the longer you wait, the less, or the not so strong our position is towards a selling party to say, hey, this is broken or this needs to be fixed. So what I always say, take the first 2 weeks that you live there to intensively use the house, open all the windows, make sure that warm water goes through all the heaters, etc., etc. You just know that everything works like you want it to be. Because after 2 weeks, it's easy to go back to the sellers compared to 2 months. Alrighty. We have moved on to the frequently asked questions. So we typically get a bunch of questions that we see come pop up every webinar. So we've gathered them in a FAQ. And let's get started. Rafaela, do you want to help me out with these ones?
Hello. So I have one question here that I think you might be able to help me. It is regarding the parent donation. Can it be a non-resident making the donation? Does it have to be from a person, or can it be come from a family trust that is outside from the Netherlands? And how long do you have to spend it?
I think that's
Shall I take this one? Yeah,
yeah.
It can. So essentially what banks are concerned with. So let's start a different way. There's two ways to look at that question. So from the donation that you get it from, is if it's outside the Netherlands, the tax authorities, they don't care. Tax authorities essentially just are happy that money comes into the economy of the Netherlands, and then they're good. If it's within the Netherlands, then there's a transfer of funds happening, and then they want to have a piece of that. So that's the consideration of when it will be taxed. Now, some countries have a tax ruling with the Netherlands, so be sure to check it with a tax advisor or financial specialist how that specifically works in your situation. Now, when it comes from a trust, usually that's no problem, but then the tax authorities don't necessarily care, but the bank definitely does, in any case, want to know where this comes from. So they want to know what the origin of these funds are. So if it's from a trust, sure, that's fine, but they want to know who are controlling this trust and where did the money come from this, how did it get into the trust fund, essentially. So that's the most important thing. The origins of the savings are the most important thing when it comes from abroad, also from when it comes from the Netherlands. But usually when you get a donation from abroad, it will not be taxed. Great question, by the way.
Yeah.
Perfect.
It was very clear.
Let's move ahead with the questions that we have on the screen, and then if anything is unanswered, we can answer them afterwards as well. Let's see. So, is it possible to get a mortgage with a temporary contract or as a freelancer, Robin?
Yeah. So, short answer, sure. It is possible, but obviously you have to comply to a certain set of rules and regulations. Let's look at the temporary contract first. So you're an employee at your employer, obviously, and then there are two different types of contract. Essentially, you can have permanent or so indefinite or temporary. Now, when you have an indefinite contract, obviously, all good. We can most probably secure a mortgage for you. Now, when you have a temporary contract, the bank wants to know that your income is durable. So it's long lasting and they know that you can pay your mortgage for a longer term. Now, when you have a temporary contract, there's a question mark there, of course. Now, it's easily taken away, this question mark, when your employer is willing to sign a so-called intention statement. What that means is that they say, we intend to keep this lovely person on for a longer term after the current temporary contract has ended, if and only if the financial situation of the company is still the same or better, obviously, and when their performance is up to scratch as well. So that's basically it, and that's the only thing the bank needs. This declaration of intent is not legally binding, so it shouldn't be any issue for your employer to sign that, to make sure that you can have a better shot at a mortgage. Now, this is one thing. So this document isn't necessarily any issue, but it is good for you to consider for yourself, not only what can I get, but what makes sense for me to get as well. So when you have a temporary contract and your income is very nice, but you think, well, I don't really like the job and I'd like to change my job or stop working completely after my temporary contract, sure, then we have to look into if it makes sense for you. So it is possible. We just have to walk through the right lines and then we're all good. Now, when you're a freelancer, it works a bit differently because when you're employed, it's pretty black and white. You have income and we can base a mortgage on that. When you're a freelancer, there's a couple of rules you have to abide by. First one is you have to have at least 12 months of history as a registered freelancer in the Netherlands. What does registered mean? You have to be registered at the Chamber of Commerce, the Kamer van Koophandel in Dutch, or KVK, it's also known as. You have to be at least 12 months, so not the 3 years that you see a lot happening online, not 3 years, 12 months is sufficient of history in the Netherlands. Now, the longer term you have your company in the Netherlands for, the better. A larger chunk of your income we can use to base your mortgage on. Now, when you have the specific situation, when you change your company from abroad to the Netherlands, and you said, okay, sure, now I have 12 months of history in the Netherlands of my company, but I already did, let's say, 6 years abroad, then we can usually include those, the history of your company from abroad as well. The only thing is it has to be shown that it's the same type of work that you do. So when you are a carpenter, for instance, in, I don't know, in the US, then sure, you do have different clients and your company is different than when you set it up right here, let's say. So that's something I would look into. So again, every person's situation is different. That makes our job very interesting. So it's also good to just have a check with your financial specialist to make sure everything aligns. But in the end, like I mentioned before, short answer, sure, a lot of possibilities there.
Perfect. Thank you. And how about in a probation period? Is it possible to get a mortgage in a probation period?
Very good. So it can be. Usually, so when you're just in the Netherlands and you're in your probation period, then no. When you're in your probation period, usually it's not possible to secure a mortgage. Only when you already have, let's say, 2 or 3 years history in the Netherlands working here for a Dutch employer, then there are possibilities there. Your maximum mortgage capacity is usually a bit lower, but only then there are possibilities to secure a mortgage when you're in a probation period. If you just came new to the Netherlands and you are in your probation period, then we just have to wait until that is done. Doesn't mean that you cannot look for properties. Actually, this morning I got a confirmed bid for somebody that was in the probation period, but that ends in about a week. So then it's good that we know we can start a mortgage application when the probation period has ended. So you can start looking and just familiarize yourself with the housing market, but really actively buying and securing a mortgage, you have to wait until the probation period is ended.
Thank you. All right. What happens if you want to leave the country after several years? A question we get asked a lot, especially because we work with expats. It's a fair and understandable question. I think 3 major things that can or will happen then. First of all, you can obviously keep your home, but you will also keep your mortgage costs. This correlates also a little bit with the second point. If you want to keep your house, but not live in it yourself or use it as a vacation home, you can rent it out. You do, however, need permission from your bank, though. There are some things you need to keep in mind, and also some measures from the government currently that make it a little bit more difficult to just rent out your home like that. For example, there is in the major cities of the Netherlands a self-obligation clause, self-habitation obligation, sorry, there we go. Meaning, in other words, that you need to live in the property yourself for a certain time period. Typically, this is around 4 years. In Amsterdam, it's up to a WOZ value of 512,000 euros, meaning that if you're buying below, then you have to live in the property for 4 years yourself before you can actually use it as a commercial property, or not a commercial, as a investment property, so renting it out afterwards. Besides that, and having to follow that obligation, you also need permission from your mortgage provider, as a value with tenants, or the property value with tenants is lower than the property value if you just own it yourself, or if it's empty. So the collateral for the bank is, the value for the collateral is also going down, and therefore the bank would like to know and well, needs to give you permission to actually move forward with changing it to a resident, a buy-to-let mortgage. Then the third option is selling your home without any penalty or capital gains, and that is the easiest, where you just sell your property. If you make any money on it, fantastic, put it in your pocket and take it to your next adventure. That's what it comes down to. Now, this has to do also with what we were just talking about. Is it possible to rent out my house or part of my house, a room? Yes, from a, and I think we'll answer this, the both of us, but yes, it is possible. As I mentioned before, if you want to rent out the entire property, then you need permission from the bank. You'll need to be in a situation where you're also allowed to do so from a governmental perspective. But if you get the green light from all your factors, then yes, you're able to rent out your property. Now, renting out a room is a little bit easier. You don't need permission from the bank. You also don't need to have lived in a property for a certain amount of years either. However, there are very strict tenant rules, or more like tenant protecting laws for tenants in the Netherlands, which means that if a tenant has lived in the property for longer than a year, for example, they get when a tenant the tenant gets certain. Well, doesn't matter. At one point,
tenant protection. So they
tenant
cannot
protection. There we go. Yeah. Exactly. So they get protection, and you cannot evict them from the property. So you want to have a good agreement with your tenant to make sure that if you want to sell the property at one point, that you can tell your tenant and say, hey, I'll give you 2 months and then you need to be out of the property. Or in other words, having an eviction clause in that agreement. Do you have anything to add on that, Robin?
No, that's pretty much it. So when you are renting out a house, that's pretty clear. You have to adjust your mortgage. That's what you have to focus on. Now, when you want to do that, consider that you might there's some cost involved. You cannot close a mortgage for an investment mortgage for an investment property for the same amount that you can close a regular mortgage for. You have to input about 30% of the property value. Now we have to see what the situation is when you want to change your current house and want to rent it out. Of course, that's really details. When you might want to rent out a room, if you call the bank now and ask them, hey, is it okay for me to rent out a room? They will most probably say, no, we don't like that, unless you have this eviction clause in your contract, indeed, what Ludo said, because that's from the bank's perspective. So they're okay with it, but they do just want to make sure that when they that the collateral of the loan is okay, that it's not at risk. So that's the most important thing. Now, obviously, it's good to know that there are some tax implications when you rent out your house or just a separate room. The income from the rental income from renting out your house is tax-free. When you only rent out a room, funnily enough, that is not tax-free. So to a certain amount it is, but over a certain amount, you have to pay taxes over that income because it's income that you build out of renting out part of your own home. Again, it's details. So when you want to do that, be sure to be well informed.
Perfect. Thank you. Okay. Then what is the 10% deposit I need to complete? I touched base on it earlier a little bit already. As a buyer, you have certain obligations when you're entering into a purchase agreement. Seller also, but a buyer as well. Now, to make sure that, sorry, I need to sneeze. No, that's gone. It's gone. That's the worst if it doesn't even come. Yeah, so the 10% deposit, you have certain obligations as a buyer, and the 10% deposit is something that has been added into the full buying process to make sure that the buyer fulfills their obligations. Now, why is that the case? If a seller is going to sell a property, they have a property that they want and need to sell potentially for a next purchase. Now, you as a buyer, you pretty much have nothing. You have no ties or anything like that. So if you at one point during the purchase think, screw this, I'm out, even though I'm in this agreement, I'm going to move to Panama and never going to show my face again. Yeah, then theoretically, the sellers cannot do anything. Obviously, they can try to get you back, but especially if you move to Panama, there's not a lot that can happen. And then the sellers still are stuck with their house and need to go through the whole selling process again. And it's just annoying, and it creates a not so nice situation. So that is why they said at one point, okay, we need an additional incentive for the buyer to stick to their obligations. And that is how the 10% deposit came into play. Now you can do two things. Either you make the 10% deposit out of own savings, in other words, out of own pocket with money that you have on a bank. But especially if you're buying an expensive property, I can imagine that you don't have 50, 60, 70,000 euros laying around that you might as well just give to the notary for a couple of months as a deposit. So what you can also do is ask the bank to make the deposit on your behalf. In other words, write down a bank guarantee or furnish a bank guarantee, where the bank says, you know, if anything goes wrong, if my client does not fulfill their obligations, then we will pay the 10% to the sellers, and you automatically, as a client from the bank at that point, get or have a debt with the bank for 10% of the purchase price. This is typically, as I mentioned before, around 1% of the guaranteed amount, or 250 euros or so. The moment that you make the deposit is typically 1 week after you have the mortgage application approved. So if you have in the offer that you need 4 weeks to get the mortgage approved, typically 5 weeks is set for the deposit amount. So that would be right around here. That's deposit. Then let's talk about our fees. I'll start with the fees for Expat Housing Network and what our fees are for the buying packages. We have, well, I would say 2, and now we have a third package as well, but typically the Smart package and the Complete package. To explain it a little bit, Smart package, a little bit more for the independent buyer, someone that is already familiar with the buying process, that might have bought a property already in their home country, is known with how step by step it's going to work, and doesn't need me to be there from A to Z. So you book your own viewings, you go to the viewings yourself, and you only contact me at the moment that you want to make an offer, where I come in to do a property document review, do a price research, make the offer on your behalf, and then, you know, obviously do a contract review. We'll book third parties, so the appraiser, notary, technical inspection for you. And we'll be there during the whole pre-transfer support. You won't see me live, you'll see me a lot via Zoom or via Google Meet. Yeah, I will be in the background to give you all the support that you need. With the Complete package, a little bit more hands-on. In other words, for someone that might not be so familiar with the process, or someone that is just so busy that doesn't have the time to go through the whole process themselves. So this is where I actually schedule the viewings for you. I'll also join you to the viewings. I'll be there to answer any questions that you might have, but more importantly, ask the right questions to the selling agent. And I'll also be physically at the appointments at the notary, technical inspector, final inspection, notary again, and again, all the transfer support as well. Now, if you're looking specifically to buy a new build property, by the way, we also have webinars specifically for new build processes. But if you're looking to buy a new build property, then the process is a little bit different, because obviously you can't go to a viewing because the building has not been built yet. But we also offer a certain service for that as well. The Complete package is 3,999. If you're looking over 500,000 euros, it's 4,250 euros. So a small increase there. Everything is including VAT. We ask a deposit payment of 499. This is something that is obviously included also in the prices that you see here. If we don't get you to the notary, or if we don't succeed, or if at one point you just think, my God, I need to leave the Netherlands, or I'm going to go to a next adventure, no worries. It's only the deposit that is invoiced. The rest is no cure, no pay based. Unfortunately, not tax deductible, but who knows what the future will bring.
Yes, this is us, the Mr. Mortgage Services. So there are different things you can do, obviously, with your mortgage. You can, so the middle two, you can see first-time home buyer and buy-to-let. Now, first-time home buyer doesn't necessarily only mean the first time that you buy, also the second, third, fourth, fifth time that you buy. That doesn't really matter. We have a fixed fee of 2,999 euros. That just covers the whole service. It doesn't matter how long it takes for you to find a house. If it's 2 months, well done. If it's 2 years, honestly, I hope it will be sooner. But if you have a very specific property you have set your eyes on and it just takes time, that's all good. All the calculations are included and all of that. Now, I don't want to emphasize it too much to bug Ludo, but RFP is tax deductible. So next year you'll get back about 37% of that, which is pretty nice, of course. Now, what you get for the 2,999 is what we previously discussed. So we'll first set up a financial analysis to really know the specific amount that you can borrow. Obviously, you can check online calculators. If anything, we have an online calculator on our Mr. Mortgage website. But to be perfectly honest, I'm not necessarily a big fan of those. If you check 5 different calculators, you will get 5 different numbers. One of the reasons is that obviously different lenders have different interest rates. Also, these calculators don't allow you to optimize your mortgage setup. And they also have to work within a certain set of parameters, right, that you have to set up this calculator for. Now, as a physical, personal calculator, I know I can use the different ranges and use your income to the fullest extent as well. So for instance, if you receive a bonus, we can include that and we can see to what extent different lenders include that, and then how to optimize your mortgage regarding that as well. So that's what we'll do when we start. And we guide you through the whole house hunting process in the sense of when you find a property that you think, well, hey, this might be it. Then we'll recalculate your options based on the current interest rate, the specifics of the property. So what kind of energy rating do you have? Are you eligible for the NHG, for instance? That's insurance arrangement. All of that. Do you have ground lease? That's all included. Also the homeowners association. That's also something that I check in with Ludo about. If he already knows something about the homeowners association, which you will be part of if you buy an apartment, for instance. All of that's something that we'll check. This applies when you buy your first home, but also again, first, second, third, fourth, fifth. Buy to let, pretty much the same thing throughout the whole process. Now, on the left-hand side, you can also see the refinancing. So when you already have a home, and you want to refinance it because you want to change your interest rate, or you want to change it into an investment mortgage, then our fixed fee is $2,499. If you go over $1 million, then the mortgage application process is significantly longer. Not necessarily more difficult, but it takes more time and more documents and so on to get things sorted. So then we have a slight addition to that. Same goes for when you're an entrepreneur. Then either we can calculate your options and be, again, very specific, and we can see how we can cater to different lenders, or you can choose to do that with a separate company that charges at least 500 euros as well, but then they are less flexible in that sense. So that's our fee. Now, we also work with a small down payment to get things started, to cover the hours that we put in for the financial analysis and so on. And that is, regardless of what package you choose, it's 299 euros. So if anything, 299 euros start-off fee. And the rest is also, just as Expat Housing Network, a no cure, no pay. So if we cannot get you to the notary, you don't have to pay us. But to be perfectly honest, we already did the financial analysis and we guide you through the process. So we know we can get you to the notary successful as well. That's basically it.
Perfect. Thank you. Thank you for giving us the information that we want. All right. Well, before we move ahead with the Q&A, we have a final poll, and that is just to see what your experience was. If you have any feedback, if you missed anything, it's always nice to hear how we can potentially improve it for next time. Never stop learning. I see that there are already some nice questions in the Q&A as well. That's always good. Good numbers coming in, fantastic. Thank you very much, guys. Nice. All right. Well, I am very glad with the numbers that we're getting in. Perfect. I'm going to move ahead with the Q&A. Rafaela, would you like to jump in on this one?
Hi. So we have 2 questions left. The first one is from Alexandra to Robin. What if one person has contract in the Netherlands and the other has a job in the UK, receiving in pounds then?
Thanks, Alexandra. It's a very good question. So there are possibilities. Sure. Coming from when income comes in from the UK, I presume that will be in pounds. And that doesn't necessarily have to be an issue as well. Not all lenders are very giddy to accept income in a different currency, but there's sufficient that do accept that. So it can be done. The only thing is, which is very important, that the person or the people that buy the house are also going to live in the house. So then we would have to prove to the bank, okay, sure, the employer is based in the UK, income is also in pound sterling. So then how does it work? So again, if you work in a store there, then that's hard to prove that you go back and forth every day. That's very unlikely. But when you have a desk job or you're a software developer, for instance, then that's all good because you can do that from the Netherlands when your employer is in the UK. So if that's the case, if we can prove and it's reasonable that you can do your job from here while your employer is in the UK, then you can no problem secure a mortgage for a residential property in the Netherlands.
Perfect, thank you. There is another question for you. What's the max LTV for temporary contract customers?
Yeah. So first, let's focus on what LTV means. That's loan to value. So what amount can you get the full value of a property as a mortgage loan? Yeah, there's no cap there. The maximum that you can get is 100% of the property value to start with. So you cannot close a mortgage for more than 100% of the value. That kind of makes sense. And that is regardless of you being what your employment situation is. So yeah, some banks have a cap when you're from outside of the EU, for instance, but that's just a select few. There's sufficient that allow you to just close a mortgage for 100%.
Thank you. There is a very good question from Vicky. I think it's for both of you. Do you think the seesaw-like equilibrium will be attained between interest rates and housing prices over the course of the next year, or will it always be in an imbalance, say it from now on? Say housing prices high and interest rates low, housing price low and interest rates high, for example.
Yeah. Yeah, so if anything taught us the last 3 years really is that there's no way to predict the future. That's one thing. And maybe Ludo, you can say something about that later on as well. We can see interest rates increasing, obviously. So what the main impact there was, I see from our side, is that people are the overbidding is a bit less. So whereas before you saw a property listing for 450, and crazy enough, it would be sold for 600,000 euros, for instance. That gap is less. So I see a kind of cooling down of the quite heated market right now. And sure, if the interest rates would suddenly drop, so that's the main thing. If there's a sudden change, so suddenly the interest rate would drop, then property values will definitely will increase, because then sellers will also know it's easy to sell my house. People want to buy because the interest rate is low. So let's go crazy with the purchase prices. Now, just to give one addition on the interest rates, they seem very high right now, and that is only in comparison with last year or the year before that. Then the interest rates were around 1.5% to 2%, and of course they're higher right now. When you look at it more in a historical overview, then they're quite average right now. Also, when you look at it from the broader perspective, when the interest rates for your mortgage are higher, in time, the savings interest rates will also increase. If anything, right now we're just in the news that pension plans might increase their payouts as well, because savings are doing better now. So if anything, if the interest rates are, let's say, between the 3.5% and the 5%, it's a significantly more healthy situation in the financial market as a whole. So what I hope is that we kind of reach an equilibrium in the sense of that around 4 to 4.5% is kind of the new basis we can base our future on. But Ludo, do you have anything to add? Anything that you see happening in the market right now?
Well, yeah. So with the interest rates rising, budgets of our clients and budgets of buyers are going down as well. And with the budgets going down, people are becoming a little bit either more hesitant to buy property, or even saying, okay, we're going to wait it out and see what's going to happen. Especially people that are renting currently, not really in a rush to move ahead. With the amount of buyers going down, we also see that sellers are like, okay, shoot, maybe we need to sell quickly, because if we wait another 6 months, things have changed dramatically. So it's a little bit unstable in that sense. On the other hand, it's also creating opportunities for the buyers that do continue looking. Because if the amount of buyers are going down and you're still in the field, then the sellers don't have a lot of people to choose from, and our negotiation standpoint is becoming better. Besides that, if money is cheap, then more people are going to make use of it. If money is going to get more expensive, then less people are going to make use of it. And this has direct influence on the market. I think when it comes to balance, I mean, yes, of course, I hope that prices are going to go down and interest rates are going to go down. That would be the dream. But I don't see that happening anytime soon, unfortunately.
Yeah, when you're buying, that's the dream.
Yeah, exactly. When you're buying, that's the dream. And I'm looking from a buyer's perspective.
Yeah.
And that's it, to be honest.
Great, thank you. I think we still have some time for a few more questions. Another for Robin. If I don't get a letter of intent from my employer,
what happens? Yeah. There are still possibilities, but first off, it's unlikely. And if your employer is really not wanting to work with you, or maybe doesn't understand what it really is, feel free if your employer is okay with that, I can give them a call as well, just to kind of explain what the situation is and what their risks might be, and that they are negligible already. That's one thing. Now the other thing is, if they really don't want to do that, there are possibilities, but then it would be the best that you are in the Netherlands for a longer term, because then we have to base your income on the average of the last couple of years that you have worked in the Netherlands, and we cannot use the full month, but about 90% then. So that's kind of the thing that you have to consider, that your maximum mortgage capacity will be less. And then we have to see what that means for you. So then it might mean that you have to adjust your expectations.
Thank you. One question from Dragana. You said at the beginning that it's hard to sell a house these days. Why?
Yeah, I said that indeed. Well, fair question, I think. More difficult than it used to be. I think that's a better way to put it. If we look back this year, February, March, May, in that time, there were so many people looking for a home, and the demand was so low, and that also had to do with the interest rates, that it was very, very easy to sell your house. You would list it today, have it sold next week Friday for the highest price you can imagine. Now we see that again, and that has mostly to do with the interest rates rising, that there are less buyers on the market, and more offer, because people are sellers, potential sellers are now quickly trying to sell to still get a rather high amount. That it's taking longer to sell, or that sellers that thought they can still get 20-25% over asking price are now getting asking price, or 5% over asking price, and maybe not being fully content with that, and therefore not selling or waiting another few months. So there's more room from a buyer side to enter into negotiation phase. And that it comes from the fact that it's becoming a little bit more difficult to sell your property. It's not impossible. I mean, if you have a realistic asking price and willing to sell market value, then you'll definitely sell your property, right? Especially in Amsterdam, it's fully built. Amsterdam, it's not like you can build another 100,000 properties in the city center. Just impossible. So there are still a lot more people that want to live here versus the amount of people offering a property. So as long as that's the case, it's not going to be impossible to sell your house. But comparing it to a couple of months ago, it is becoming more difficult. And with people that are expecting the market of a couple of months ago, it's difficult to negotiate with them. Okay. That's it.
Ludo, how we are with regarding the time? Can we still have few questions?
Yeah, I think if we finalize the final two questions in the Q&A, and then if there are any other questions left, well, I'll move ahead to the next slide. But you guys can definitely reach out to us either via this button and otherwise via this QR code. But yeah, we can still do the final two questions that we have in the Q&A.
Good. So I have another question for Robin. Can you refinance your mortgage, for example, after 2 years when interest rates goes down?
Yes, you can. The thing is just it kind of depends on how long you fix your interest rate for. So regularly, I mentioned before, the duration of a mortgage is 30 years. And within that duration, you can fix your interest for the first 10 years, let's say. What happens is the bank expects to get your interest payments for the next 10 years, and your interest will not change for the next 10 years. That gives you security, and the bank also security about their income. If you then want to change it after 2 years, because the interest rates goes down, then what the bank will say is, hey, sure, you can get that lower interest rate, but you have to pay a penalty for the amount of interest that we expected to receive before. So there are definitely possibilities, but then we can see if it makes financial sense to do so, because you have to pay something out of your personal savings to cover for that penalty that you have to do and the difference of interest rates. But the major benefit is then that you have lower monthly payments due to the lower interest rates. Definitely possibilities, we'll have to see if it makes sense to you.
Thank you. So let's go to the next question from Cynthia. As a Belgian citizen, can you ask a mortgage in Belgium for your home in the Netherlands if the mortgage conditions would be better there?
So we work with Dutch lenders, not for Belgian lenders. So it could be, if we look at it from the other perspective, so we can secure a mortgage in the Netherlands with Dutch banks for a property that is in the direct vicinity of the Belgian border. So there's a possibility about 5 to 10 kilometers, I think, is the range. But to be perfectly honest, you have to check with the Belgian bank if they're okay with that. I expect them to have the same rules and regulations that you can do it if you're within a border of around 5 to 10 kilometers from the border of the Netherlands and Belgium.
Perfect.
Well, I think that was the last question. I think there might have been a few questions in the chat that are unanswered, but we're running out of time. If there is anything that you would still like to ask us, as I mentioned before, please do move ahead with scheduling a call with either of us, both of us. That's what I would recommend, obviously.
Right, makes perfect sense.
Yeah, exactly. Thank you very much, Robin, for being here and being our financial partner. Thanks, Rafaela, for hosting the Q&A. It was very nice. And thanks, of course, to everyone that has joined today. I hope to speak to you guys soon.
Thanks, Ludo, for hosting again. Enjoy the day, guys.
All right, have a good one. See you guys.
Bye.